I am Jawad Ahmad, and today is our next class on rules of debit and credit and accounting entries. The basic rule that we have already studied is that increase in asset and expense will be debited, and increase in capital, liability, income, and sales revenue will be credited. So let's move on. When income, sales, and expenses should be recorded, we have already studied this concept in our previous classes. They should be recorded when they have incurred or earned. For example, when an income is earned, the income should be credited, but the cash or bank balance is not received. Therefore, income receivable account should be debited. So, the entry when any income is earned will be income receivable debit, income credit, and when this income will be received in the form of cash or bank balance, the entry will be bank or cash debited, and income receivable that was initially debited to receive the money in future. Now we will credit this to remove this right, and similar effect will be affected on the sale revenue. So when any sale is done, the entry will be debtor debit, sales credit, means that the right to receive money in the future will increase, and sale revenue, that is our income, also increases. Now, what happened when an expense is incurred, not paid? As income is incurred, therefore expenses should be debited because the expense has already been done, but it has not been paid into cash. Therefore, we cannot credit the cash. We will credit the payable account, that is expense that is already been incurred. The electricity for 30 days that has been used has been debited, but the bill has not received, therefore it has not been paid. So we will generate a payable liability account. So the entry will be expenses debit, payable for the expenses credit. So let's move to the most commonly used double entries that are commonly used in a business. Before we can start our class, please subscribe my channel and press the bell icon so you can get all my videos on a timely basis. Let's start. What are the basic double entries that are used in a business? Firstly, when a capital is brought by the owner in the form of cash, the entry will be cash debit, capital credit. And when the capital is brought in the form of some bank balance, some cash balance, and some buildings are brought to the business or their title documents, and some stock is also brought by the owner for running the business as a first time investment or investment as a running business. So the entry will be fixed asset also increases. So fixed asset debited, bank increase, bank debit, cash debit, building debit, and stock brought. So the entry for the stock will be purchases debit, capital credit. So the combined entry will be fixed asset debit, bank debit, cash debit, building debit, purchases debit, capital credited with the total amount of debit side. Now move to the drawing entries. Whenever a cash or bank balance is withdrawn by the owner, the entry will be drawing debit. Drawing is the contra account of capital, that is account that will decrease the capital. So the liability that has first been created by crediting the capital account and now been decreased by debiting the drawing account. So the entry here will be drawing debit, cash credit, or bank credit. If the owner has not taken the cash or bank balance, but he has withdrawn some business usable articles or some business stock and brought it to its or taken it to it, home, then the entry will be drawing debit, purchases credit. If he has taken any fixed asset of the business, then the entry will be drawing debit, fixed asset credit. Entries when any business purchase some saleable items for its business, then when such items are brought on cash, the entry will be purchases debit, cash credit, or purchases debit, bank credit. Or if they are purchased on credit, then the entry will be purchases debit, creditor credit. And when this creditor is paid for the goods purchased from him in the form of cash or bank balance, the entry will be creditor debit, cash credit, or bank credit. If some discount is received while paying to for the creditor, the entry will be creditor debit, cash credit, or bank credit, or discount received income will be credited. It is a sort of income that we have earned while paying our creditors from whom goods have been purchased on credit. And when some saleable goods have been returned to the creditor or to the vendor, the entry will be creditor debit, purchase return credit. It means that some items or some saleable items are such to whom we do not require them now and need to be returned back to the vendor. Now move to the entries when any goods or saleable items have been sold to the customer. The entry, if they have been sold on cash, the entry will be cash debit, sales credit. If they have sold on credit and we are assuming that or we are intended to receive some money from our customer at a future date, the entry will be debtor debit, sales credit, and when the debtor pays for its debt, the entry will be cash debit, debtor credit. And while receiving any money from the debtor, if he allowed him some kind of discount, then the entry will be cash debit with the amount received from the customer and the amount that we have forfeited or we have allowed the customer not to pay us, the entry will be discount allowed expense debit and debtor will be credited with the total amount. If our debtor return some goods to us, then the entry will be sales return debit, debtor credit. Sale return entry will decrease the sales amount. Now move to the fixed asset transactions. Whenever a fixed asset is brought on cash or bank balance, the entry will be fixed asset debit, cash credit. For example, AC debit, cash credit. Or when we have purchased a fixed asset on credit system, the entry will be fixed asset debit, payable for fixed asset credit. And when we pay for this vendor against the fixed asset brought from him, the entry will be payable for fixed asset debit, cash credit. If you return the fixed asset to the vendor, that we see that we do not want such fixed asset for our business due to any reason. For example, the fixed asset is not as per our intended need, then the return entry will be payable for fixed asset debit, fixed asset credit. Here you can see that it is the same entry that we have passed when we have purchased it on credit system, fixed asset debit, payable for fixed asset credit, and now we are returning. So we are merely transferring this entry to the debit and credit side with the reverse effect that the item that firstly debited now credited and the item that is firstly credited now debited. So it is the contra entry that is cancelling the first entry. And whenever a fixed asset is depreciated or lose its value, the entry will be it is an expense for a business. Therefore, increase in expense will be debited, depreciation expense debit, and it will decrease the value of fixed asset. Therefore, fixed asset will be credited. Now move to the next type of transactions, that is bank to cash transactions or cash to bank transaction. Bank debit, cash credited when cash is deposited into the bank, and when the cash is withdrawn from the bank, then the entry will be cash debit, bank credit. Now move to the expense nature transactions. Expense debit, cash credit when any expense is paid in the form of cash. Expenses done for personal use if the owner withdraws some money from the business and incurred any expense that relates to its personal life, not related to the business, then the entry will be drawing debit, cash credit. The interest that is paid to the bank against the loan taken from the bank, the entry that need to be made when cash is paid against the interest incurred on a bank loan, interest expense debit, cash credit, and the entry that will be generated when any amount is payable against the interest on loan, interest expense debit, and payable for interest credit, and when it is paid, the entry will be interest payable debit, cash credit. Similarly, when any interest is received from the bank against the investment that we have been made, the investment may be short-term investment, medium-term investment, or a long-term investment. The entry on receiving a interest will be cash debit, interest income credit. And whenever this interest is receivable from a bank, that is whole year has been expended out or the whole year has been elapsed and we are going to receive any money from the bank against the investment that we have been made, the entry will be interest receivable income debit and interest income credit. Sometimes it happens that we issue a check to our and that okay. So let's meet in the next class.